common question we often hear is, why does a balance sheet balance, and what does that mean? All right, well, to answer that, we're going to need to talk about three things. And the first thing is, what is on a balance sheet? Well, there's basically three things that go on a balance sheet. One is things that we own. And by own, we mean things like we hopefully have some cash. We perhaps own some equipment. Perhaps we have a car, perhaps we have some real estate and fixed assets of various kinds. Maybe we have inventory, things that we're holding for resale. Maybe we have receivables. These are things that people owe us, so we consider the fact that someone else may owe us money, maybe for something we sold, or maybe we lent them money. We have a receivable. Well, if we add up the value of all these things, we take how much we have in cash and the value of our equipment and what's our real estate, what did we pay for it, and our inventory. We add up the dollar value of all of that, and let's say in our case we come up with a value of, let's say $100,000. I'll put a small k here to indicate thousands. So this is term number one. Term number one is, what do we own? Term number two that goes onto a balance sheet is, what do we owe? So what do we owe to other people? Well, we usually have debt of various kinds. We may have a loan payable. We may have an accounts payable. We owe people money. We owe people for our electric bill and rent and various other things that we may have purchased something and we haven't paid for yet, so we have an accounts payable. We have on our real estate, maybe we owe money on a mortgage. So we add up all the things that we owe, and we again we convert them to what's the dollar value of all of the things that we owe, and we come up with another number. Now in our example, let's just assume that the value of everything that we owe is $70,000. All right, so these are the first of two things that go on a balance sheet. Well, what's the third thing? The third thing is a concept that we're going to call net worth. Net worth. And net worth is really the subtraction. If we take what we own and we subtract what we owe, we will come up with our net worth. All right, well, let's see what that looks like on a graph. So we're going to create a simple graph over here. Imagine those axes are straight lines, and on this one we're going to put dollars. And first thing I'm going to draw is a little bar chart, a little bar here, or a column, and this is what we own. All right, so imagine that if I bring that over here, in our example, what we own is $100,000. Okay, now I'm going to draw another chart that's going to represent what we owe. Let me switch colors for that. I think I'll choose red. And here I'm going to draw another bar. And this one is what we owe. And what we owe, if we were to carry that across, what we owe in this example is $70,000. All right, well, where is our net worth? Remember right here, we were talking about net worth is equal to what we own minus what we owe. So net worth, I'm going to convert to a different color. Maybe we'll use green for our net worth. And that is going to be this little piece right here. This little box right here, we'll maybe shade that in a little bit, and that little box is our net worth. And I've drawn that so that these two are of equal height. Imagine that these are of equal height. So what we have here is a situation where what we owe plus plus our net worth equals what we own. By definition, since net worth is sort of the plug value, it's what we own minus what we owe equals our net worth. If we were to switch that formula around, we have what we own minus what we owe equals our net worth. And I'll just write net there. We can say the same thing by saying what we own equals what we owe plus our net. What we own equals what we owe plus our net. That's exactly what we are seeing in this chart. Now, in the world of financial reports, there is a different word that we use for what we own. We typically talk about that as being an asset. So assets are equal to, and the word for what we owe is liability, or liabilities in plural, liabilities. Assets equal liabilities plus our net worth. This is the basic accounting equation. Assets equals liabilities plus net. And we can see from this chart that they are always going to be equal. You might be wondering, what if we owe more than what we own? Well, then the net worth simply becomes a negative number, meaning we have a negative net worth. Not a good situation. Whatever you can do, avoid owing more than you own, if at all possible. This is why balance sheets always balance, because their assets equal their liabilities plus their net worth.